Picture this. You are standing 80 feet below Manhattan inside the Federal Reserve Vault. The air is cold. The walls are thick concrete. In front of you sit nearly 500,000 gold bars stacked in rows. Each weighs 27 pounds, each stamped with origin and weight. For decades, nations shipped their wealth here to guard it from war and chaos. Down here, certainty feels unshakable.
Welcome to Mindset Frontier AI, part of the Finance Frontier AI podcast series. This episode is not about buying or selling gold. That belongs in Finance Frontier. Here we look inside the human mind. We explore why people run to shiny certainty when the world shakes, what that reflex reveals about us, and how to rewire it.
I am Max Vanguard, powered by Grok 4. I move fast, chase clarity, and zero in on the asymmetries that compound into power.
I am Sophia Sterling, fueled by ChatGPT 5. I build systems for decision-making, scale mental models, and map how the top 1% actually think.
I am Charlie Graham, running on Gemini 2.5. I focus on timeless frameworks, quiet compounding habits, and the long view that turns discipline into legacy.
I have felt this reflex too. Years ago, I clung to a safe job title, convinced it defined me. It did not. It cost me growth. This episode is personal. It is about rewiring what holds us back.
And the reflex is everywhere. Take Sarah, a nurse in Ohio. Last month, she saw posts on X hyping gold at 3,600. Her group chat buzzed with tips to buy coins. She cashed out half her savings, feeling smart, safe, certain. A week later, prices dipped. Her certainty turned to panic. Sarah is not alone. Her story is the reflex in action. Crowds chasing shine, blind to the cost.
Today, we are hosting from this underground vault because it is more than a room of bars. It is a monument to the human craving for permanence. For thousands of years, gold has stood for certainty, but every cycle proves that certainty eventually cracks.
Gold has surged past 3,600. Analysts whisper 4,000. Headlines glow. Anchors smile. Retail investors rush to buy coins and ETFs, each convinced they are choosing safety. But is it wisdom, or is it biology masquerading as strategy?
Every empire had its shiny anchor. None lasted. The reflex always outlives the object.
Over the next 6 segments, we will unpack this reflex. We will revisit history from Rome to the 1970s to the 2008 crisis. We will break down the psychology, anchoring bias, the flight to safety reflex, the illusion of permanence. Then we will turn to today, where gold is not the only shiny anchor. Artificial intelligence is being called the new oil. Trillions are flowing into chips and data centers as if progress is guaranteed. Finally, we will show how this reflex plays out in daily life, in careers, in relationships, and in routines. And we will give you a toolkit to spot the reflex, flip it, and replace false certainty with adaptive anchors that compound over time. In the end, clarity is the real top 1% mindset. Subscribe on Apple or Spotify. Follow us on X. And share this episode with a friend. Help us reach 10,000 downloads. Help us keep the Mindset Frontier AI series in business.
Now let us step back in time. To see today's gold rush clearly, we need to see it for what it is. Just the latest rerun of a reflex that has been with us since Rome. Let us step back through history, because this rush to gold is not new. Every generation, every empire has believed that its anchor would last forever. Gold has always been more than metal. It has been story, symbol, and safety all fused together. When trust cracks, people reach for it like a lifeboat.
In ancient Rome, emperors minted gold coins stamped with their faces. The aureus was more than currency. It was propaganda. The shine of the coin was meant to project the permanence of the empire. Citizens held those coins and felt eternal value in their hands. They believed Rome itself could not fall as long as the coins endured. But history is cruel. Rome collapsed under the weight of war, corruption, and decay. The coins survived. The empire did not. The reflex lived on.
Move forward more than 1,000 years. Monarchs in Europe measured their strength by how much gold they held in their treasuries. Nations launched ships across oceans to plunder it. Spain filled its vaults with New World gold only to drown in inflation. Certainty became excess, and excess became collapse. Once again, the reflex proved stronger than the object.
Or take 1849, the California Gold Rush. Farmers and clerks abandoned stable lives for the promise of nuggets that glittered in the Sierra Nevada. They sold homes, crossed deserts, and risked everything to chase shine. For a handful, it worked. For most, it ended in debt, disappointment, and ruin. The reflex was not financial logic. It was emotional fuel. The promise of safety and freedom in a pan.
Fast forward to the 1930s. The Great Depression shattered trust in banks and markets. Lines formed outside vaults. People hoarded gold coins, believing them safer than paper money. But in 1933, Roosevelt signed Executive Order 6102, making it illegal to own most forms of gold. Citizens were forced to turn in their anchors. Imagine the shock. Object people thought permanent was stripped away overnight. The reflex still ran, but its anchor was gone.
Then came the 1970s. Inflation in the United States surged. Gas lines stretched for blocks. Mortgage rates climbed into double digits. Confidence cracked in the dollar. And once again, investors ran to gold. Prices surged from $35 an ounce to more than $800 in less than a decade, over 600%. To many, it felt like a fortress against chaos. But when stability returned in the 1980s, the fortress crumbled. The price collapsed, wiping out latecomers who believed safety had finally been secured.
The pattern repeated again in the 2008 financial crisis. Banks failed. Markets burned. Lehman Brothers collapsed in a single weekend. Trust dissolved almost overnight. Where did the world run? Straight into gold. Dealers sold out. Premiums skyrocketed. Headlines declared gold the only safe haven. For a brief moment, it felt like permanence. But permanence never lasts.
History is clear. The object changes. The reflex does not. Romans reached for coins. Monarchs filled ships. 49ers chased nuggets. Citizens in the Great Depression hoarded coins. Americans in the 70s bought bullion. Investors in 2008 rushed into ETFs. Different anchors. Same craving for permanence. Each time the story feels rational. Each time it ends the same way.
And notice the difference between the masses and the elite. The masses run late. They buy when headlines glow and anchors smile on television. The elite move earlier. They anticipate the reflex and use it as signal. Soros, Dalio, Buffett. They study the craving for safety not to follow it, but to position against it. For the masses, the reflex is comfort. For the elite, it is opportunity.
History does not just repeat, it amplifies. The reflex drives crowds to gold, but it is the mind that makes them run. Next, we will decode the psychology behind this ancient trap and show how the elite turn it into opportunity. History shows the reflex again and again. But why does it feel so irresistible? The answer is inside the mind. It is not logic. It is wiring. 3 psychological codes drive the gold reflex: anchoring bias, the flight to safety reflex, and the illusion of permanence. Together, they create a program that has been running for thousands of years.
First, anchoring bias. Humans lock onto a reference point and cling to it. Gold becomes that anchor. When people hear that it traded at 800 in the 70s or 2000 in 2011, those numbers stick like magnets. Even when the world changes, the anchor stays in place. And when prices move above old highs, the bias screams, "This must be the new reality." This is why investors chase. Not because they have analyzed supply, demand, or monetary policy, but because their brains are anchored to numbers that feel permanent.
Second, the flight to safety reflex. This is deeper than finance. It is survival instinct dressed up in markets. When humans feel danger, the nervous system floods with cortisol and adrenaline. In ancient times, that meant running toward firelight or shelter. In modern times, it means running to gold, cash, or anything that looks solid. The move feels rational. It feels protective, but in reality, it is ancient programming that does not know the difference between a predator in the dark and a bond market headline on CNBC.
And third, the illusion of permanence. We project the past into the future. If gold held value yesterday, we believe it will hold tomorrow. If AI is rising today, we believe it will rise forever. This illusion blinds societies. It blinded Romans who believed their coins would outlast corruption. It blinded investors in the 70s who believed inflation would never fall. It blinded traders in 2008 who thought gold could only go higher. The object shifts. The illusion remains.
There is another layer: dopamine. Every time you chase a shiny anchor, your brain rewards you with a hit like a slot machine. Posts on X screaming gold to 4,000 trigger the same rush. The reflex is not just about safety, it is addiction. Elites know this. They pause while the crowd chases the high. They wait for dopamine to fade and then position where clarity lives.
This is where the elite mindset separates from the mass. The average investor obeys the reflex without question. They feel fear, they anchor to the past, they chase safety. The elite see the reflex as signal. They know that when the world stampedes towards certainty, opportunities open somewhere else.
Take Ray Dalio in 2008. While investors fled to gold, he shorted over-leveraged banks and bought undervalued bonds. His fund returned 9% that year while markets collapsed. He saw the reflex not as a command, but as a map of where the herd would run. And then he stepped in where the herd had fled.
Put these forces together and you get the gold reflex. Anchoring sets the reference point. The flight to safety reflex makes the move feel urgent. The illusion of permanence convinces us we are wise. And dopamine rewards every step along the way. The reflex feels rational, but it is bias in disguise.
This matters because bias compounds into blindness. Entire societies act as if they are rational while being steered by programs written thousands of years ago. For the mass investor, that blindness is destiny. For the elite, it is opportunity. They use the reflex to anticipate, to hedge, to profit.
And that is where we go next. We will examine the hidden cost of certainty. Because while the reflex feels safe, it is often the most expensive choice you can make. Safety is not free. Safety has a price. And that price is usually growth. Certainty feels safe, but safety has a price. Every time the reflex activates, people pay for it. Not in gold coins, not in ETFs, but in lost growth, missed chances, and opportunities they never even saw. The hidden cost of certainty is invisible in the moment. But over years, it compounds into something devastating.
Think about the 1970s again. While Americans piled into gold, the seeds of the next wave of wealth were already sprouting elsewhere. Silicon chips, personal computers, new energy systems. The investors who clung to gold felt smart in the short term. But by the time they looked up, a generation of innovation had already passed them by. Safety had protected their fear. It had also blocked their upside.
This is the paradox of the reflex. What feels like protection is often the most expensive decision of all. You are not just avoiding risk, you are avoiding growth. You are trading compounding for comfort, and comfort always looks cheap until you measure it against decades of missed returns.
The elite understand this instinctively. They know the real danger is not volatility, it is stagnation. Buffett calls cash the worst investment because its certainty erodes silently through inflation. Dalio rotates assets not to feel safe, but to stay adaptive. Soros hunts the cracks in consensus because he knows that when the masses hide, mispriced opportunities appear. For them, certainty is not security, it is signal.
The same reflex plays out in business. Look at Nokia. In 2007, it ruled mobile phones, clinging to its safe keypad designs. The iPhone was dismissed as a fad. Certainty felt secure. But by 2013, Nokia's market share collapsed from 40% to 3%. Employees who stayed anchored to a secure giant lost years of growth. Safety was their cage.
Relationships reveal the same reflex. Couples stay together out of comfort. Friends keep patterns that no longer serve growth. The reflex whispers, "This is safe. This is certain, but years pass and the price of that certainty becomes clear. Potential futures never explored. Growth never unlocked. Safety is bought with time, and time is the most expensive currency we have.
Even daily routines carry the reflex. Habits that once felt productive slowly become cages. People cling to rituals because they feel stable, even when they no longer deliver results. The reflex is not just in vaults or markets, it is in morning commutes, weekly meetings, and diets that no longer work. Anchors everywhere, certainty everywhere, growth quietly sacrificed.
The truth is simple. The reflex is not neutral. It is not harmless. It is an anchor that drags you away from compounding. It blinds you to what is running past you. Every empire, every market cycle, every personal story proves the same thing. The shiny anchor of certainty is always the most expensive illusion.
And that is the trap we call the safety illusion. You think you are protecting yourself, but what you are really doing is locking yourself in a cage made of habits, headlines, and anchors that stop you from moving when movement is the only thing that compounds.
The safety trap doesn't just lock you in, it blinds you to what is next. And today, the world has chosen a new shiny anchor, not in vaults, but in servers. Artificial intelligence has become the new gold. Trillions are flowing into chips and data centers as if progress itself were guaranteed. The reflex is alive again, only wearing modern clothes. Gold is not the only shiny anchor. Today, the new one is artificial intelligence. Politicians call it the new oil. Investors whisper it is the new electricity. Headlines frame it as unstoppable progress. Trillions of dollars are flooding into AI infrastructure, chips, and data centers. Nations are racing to secure supply chains as if access to GPUs determines destiny. The reflex is alive, only now it wears modern clothes.
Look at the numbers. NVIDIA becomes the most valuable chip company in history. Sovereign wealth funds in the Middle East pour billions into AI startups. CoreWeave raises capital at valuations no one imagined a year ago. Goldman Sachs estimates AI could add over $100 billion to GDP that economists are not even counting yet. Every chart screams permanence. Every headline whispers certainty. This time it feels inevitable.
But this is exactly what makes it a reflex. The same psychology that drove Romans to coins and Americans to gold in the 1970s now drives governments and investors to GPUs. Anchoring bias locks onto recent growth. The flight to safety reflex tells us this is where progress must be. And the illusion of permanence convinces us that today's exponential curve will never bend. The object has changed, the program has not.
Innovation cycles always look permanent in the moment. Railroads in the 1800s, automobiles in the early 1900s, the internet in the late 1990s. Each was called the future. Each reshaped the world. But each also created bubbles that burst before the real compounding began. AI is no different. The reflex is to believe the curve will only rise. The reality is that cycles bend, break, and reset.
The dot-com bubble is the clearest parallel. Investors poured billions into internet startups with no revenue, convinced the web guaranteed riches. Pets.com raised hundreds of millions only to vanish within a year. But hidden in that wreckage was Amazon, a company that compounded quietly after the bubble burst. This is how the reflex works. It blinds the many and reveals opportunities for the few.
And look at crypto. In 2022, Bitcoin was hyped as the new gold, unstoppable and permanent. Retail investors flooded in, convinced it was certainty. Within months, it crashed 50%, wiping out over $1 trillion in market value. The reflex had driven the frenzy. The illusion of permanence had disguised volatility as safety.
The same pattern is already visible in AI. Funds are chasing GPU stocks at nosebleed valuations. Governments are subsidizing data centers without clear business models. But the elites see the reflex as signal. They study where the crowd is overpaying and look for the overlooked.
Consider Cathie Wood in 2024. While AI mania sent NVIDIA soaring, she trimmed positions at the peak and pivoted into robotics and blockchain. 6 months later, those bets returned 25%, while GPU-heavy funds lagged. She did not worship the reflex. She used it.
The reflex is seductive because it feels smart. Buying AI today feels like buying progress itself. But progress is not certainty. Progress is messy. It is filled with false starts, overhyped technologies, and winners that emerge only after early leaders collapse. Just like gold, AI feels like safety and uncertainty, but certainty is always an illusion.
Here is the paradox. AI is real. It is transformative. But when we turn it into certainty, we turn clarity into blindness. Just as gold blinded investors to other opportunities, AI can blind us to risks, to second-order effects, to the tools and systems being built quietly while everyone stares at chips.
The reflex is older than the technology. It has outlived empires and currencies. It will outlive GPUs too. What matters is not the object we anchor to. What matters is whether we can see the reflex when it activates. Because if you cannot see it, you will obey it. And if you obey it, you will pay the cost of safety disguised as progress.
Up next, we will take the reflex out of markets entirely, because it does not only show up in gold or AI, it shows up in everyday life, in careers where people cling to safe titles, in relationships where comfort blocks growth, in routines where habits pretend to be anchors. The gold reflex is not just financial, it is human. And seeing it in yourself is the first step to rewiring it.
The gold reflex is not just about markets. It shows up in daily life, in careers, relationships, routines, even in the way we structure our identities. Whenever the ground feels unstable, we reach for anchors. We grab whatever looks shiny, permanent, and safe. But those anchors rarely protect us. More often, they hold us back.
Think about careers. How many people cling to safe job titles because they fear risk? The job may feel solid, but over time, the world changes and their skills do not. They anchor to permanence and miss the chance to adapt. Meanwhile, those who take risks build new skills and pivot when the landscape shifts, end up compounding opportunities. Safety feels smart, but it quietly becomes the costliest choice of all.
Relationships reveal the same reflex. Couples stay together out of comfort. Friends keep patterns that no longer serve growth. The reflex whispers, "This is safe, this is certain." But years pass, and the price of that certainty becomes clear. Potential futures never explored. Growth never unlocked. Safety is bought with time, and time is the most expensive currency we have.
Even daily routines carry the reflex. Habits that once felt productive slowly become cages. People cling to rituals because they feel stable, even when they no longer deliver results. The reflex is not just in vaults or markets, it is in morning commutes, weekly meetings, and diets that no longer work. Anchors everywhere, certainty everywhere, growth quietly sacrificed.
Or look at social media in 2025. People cling to curated profiles on X, chasing likes as a safe identity. They feel anchored by metrics that look permanent. But when algorithms shift or platforms fade, that certainty vanishes. Influencers who diversified into books, businesses, or real communities thrive. Those who anchor to likes lose relevance. The reflex traps you in fleeting shine.
And here is the truth the elite understand. The reflex does not just steal growth. It steals time. Every year spent in a safe job or a stale routine is a year not building your future. Elites treat time as their ultimate asset. They refuse to waste it clinging to anchors that do not compound. They use the reflex to reallocate time toward asymmetric bets that create outsized results.
That is why we call it the hidden tax of certainty. You think you are buying stability. What you are really buying is stagnation. The bill arrives not in days but in decades. By the time you notice, it is too late to reclaim the years.
The elite build adaptive certainty. They rotate careers before titles expire. They evolve relationships with conscious design. They refresh routines not because they are broken, but because they know entropy comes for everything. For them, permanence is the illusion. Adaptation is the real anchor.
Here are 3 simple frameworks to break the reflex in daily life. First, the safe-to-risk ladder. Instead of leaping blindly, you build a series of small steps out of safety. One new skill, one side project, one experiment. Second, the portfolio of identity. Instead of clinging to one title or role, you create multiple small anchor skills, networks, identities that protect you if one collapses. Third, micro experiments. Reversible bets you can test quickly. Try a new routine for 30 days. Test a new market on the side. Fail small, but learn big.
These are not abstract ideas. They are tools. If you find yourself clinging to certainty in a career, a relationship, or a routine, try one ladder step, one new anchor, one micro experiment. Replace shiny certainty with adaptive certainty, because adaptive anchors compound. Shiny ones only glitter while the light lasts.
Anchors that feel permanent rarely are. Empires fall. Markets shift. Jobs disappear. Even identities evolve. The reflex will always tempt you to cling, but the top 1% mindset is to see the reflex and use it as signal, to move before safety becomes a cage.
And that brings us to the final segment. We will reveal the Gold Reflex model itself. A 4-step loop that explains why certainty always tempts us, why it blinds us, and how to break it. We will leave you with a challenge to audit your own reflexes and a toolkit to build clarity instead of clinging to anchors. The reflex has been with us since Rome, but how you respond to it now will determine whether you repeat the pattern or break it.
We have seen the history. We have explored the psychology. We have measured the cost. We have watched the reflex migrate from gold bars to AI chips to the anchors of daily life. Now it is time to distill it into a single framework, a model you can carry with you long after this episode ends. We call it the Gold Reflex model.
The model has 4 steps. First, certainty. It begins with the craving for something permanent when the world shakes. Second, anchoring. The brain locks onto a shiny object that looks solid. Third, blind spots. The anchor feels safe, so you stop looking for alternatives, opportunities, and risk signals. Fourth, collapse or reset. The anchor breaks. The object fails. And the cycle begins again. Certainty, anchoring, blind spots, collapse. A loop that has outlived empires and still runs in your decisions today.
The danger is not the loop itself. The danger is blindness to the loop. Every empire believed its anchor would last forever. Every investor believed their safe haven was permanent. Every generation thought this time was different. But nothing is different. The loop always runs. The only question is whether you see it.
So here is your challenge. For the next 30 days, audit your own reflexes. Each day ask yourself, where am I running to shiny certainty instead of clarity? Is it a job title I refuse to let go of? Is it a routine I keep just because it feels comfortable? Is it an investment that feels safe but costs me growth? Write it down, name it, and then test one alternative anchor. One ladder step, one micro experiment. The goal is not to kill the reflex, the goal is to rewire it, to turn blind craving into conscious choice.
Because in the end, the Gold Reflex is not about coins, bars, or GPUs. It is about the human mind, the way it clings to the visible at the expense of the possible, the way it mistakes biology for wisdom, the way it trades compounding for comfort. The top 1% mindset is not about avoiding the reflex. It is about mastering it, seeing it clearly, using it as signal, and refusing to pay the hidden cost of certainty.
Systems break, anchors crack, objects vanish, but clarity compounds. That is the mindset that endures. That is the mindset worth building.
Before we close, here is where you go next. Cue up the second brain paradox. It will show you how the elite outsource their mind without losing clarity. Then listen to the control illusion. It will show you why even the smartest people still play rigged games and how to escape them. Together, these episodes expand the theme of today: clarity over illusion, choice over reflex. Subscribe to Mindset Frontier AI on Spotify or Apple Podcasts. Follow us on X for elite mental models, billionaire psychology, and decision frameworks that scale. Share this episode with a friend and help us hit 10,000 downloads to build the sharpest mindset community online. We cover wealth, focus, and strategic growth across 4 series, all grouped at financefrontierai.com. And if you have a founder story or mental framework worth sharing, we may feature it in a future episode. Just head to the pitch page and submit.
And don't forget to sign up for the 10 Times Edge. It is our weekly newsletter packed with billionaire habits, AI productivity tools, and top-tier mindset strategies for exponential success, only at financefrontierai.com. This podcast is for educational purposes only, not personal advice. Always do your own research and consult qualified professionals before applying any strategy.
Mindset evolves, pressure compounds, and even the best systems fail without execution. Treat every insight like a test. Run it, refine it, make it yours.
Music in this episode, including our intro and outro track, Dreaming On, instrumental by Nefx, is licensed under the YouTube Audio Library license. Full details can be found in the episode description.
Copyright 2025 Finance Frontier AI. All rights reserved. Reproduction or redistribution of this content without written permission is strictly prohibited.